Good morning, traders. This is Tony, Easymarkets, dealing room in Sydney, TraderTalk. We have some big moves overnight. We've got some dollar-yen pullback from 114 has extended for a second day. This is on the back of Yellen coming across a little bit more dovish, a bit more concerned about inflation. This opens the door for the Fed to be delaying their rate cut agenda for the next year. In terms of how this is going to play out in the market in the next couple of days, we do have CPI numbers from the US on Friday. They've grown in importance. If they come out weak, then the story that the Fed will be open to delaying any rate hikes this year will be definitely on the table. In the short term, this will have the most effect on dollar yen going lower and the euro going higher. Now, the dollar yen didn't fall that much overnight as stocks remain quite strong, also helping the dollar yen remain supported at some of its shorter term supports. Here is that the euro failed at 115. Now that led to a little bit of US dollar resurgence, but in regards to whether this can be delayed, the test of 115 again, the general fundamentals behind the move in the euro are quite strong, and whether with the US dollar on the back foot, then a break of 115, as you can see here from the yearly chart, would be very significant and lead to potential move higher towards that 118 to 120 targets on the top side. And a weak CPI and a Fed which is delaying their rate hike definitely contribute to that. In terms of other moves in the market at the moment, the Aussie Kiwi technically broke above the 105.50 resistance 2 days ago. It's pulling back towards that resistance, which is now turned into a support. So technically a strong buy here at that level. In terms of the top side targets, going back towards 107 is definitely achievable in the short term. In regards to the Australian dollar,